Hello and welcome to our weekly economic outlook in the second trading week of 2026. As always, let's start with the economic data and geopolitical tensions, or generally a review on what happened previous week, and then we can go forward and check the economic data and generally the week ahead. Last week, while we had very busy week in the economic calendar, at the same time, the international geopolitical tensions also were high, especially with the ongoing revolution in Iran. Well, the people where the people are outside for the second week against the Islamic regime based in Iran, and they're protesting against that. And this now it's changed to almost we can say that's a revolution is going on now. What makes this internationally important is that now the chance or the possibility of U.S. military intervention also is increasing in this political tensions in the Iran, and that can increase the overall geopolitical tensions even higher, especially after the previous 2 weeks that we had tensions in Venezuela. However, on the other hand, the tensions between the Russian and Ukrainian, with some lights at the end of the tunnel, is getting just like there are some lights at the end of the tunnel and some hopes to it, especially we know that after the last week's Ukrainian with European and American together, they prepared an offer for Russia. The American also preparing some new sanctions against Russia that can put the pressure on the Russian politicians to accept this new offer that they had, and maybe we can find some way to say, okay, now that's the time that we are getting closer to end the war. Anyway, let's go forward and check what we had in the economic calendar. Last week on the economic calendar, as mentioned, it was a very busy week with the inflation numbers in inflation data in China and the Eurozone, and also the labor market numbers in labor market data and numbers in the United States. However, we had PMI data as well. Generally, the manufacturing PMI, we know that it's already weak in many economies. Last week, the published data showed that the service sector also is getting weaker across the board. Despite China and Spanish numbers that we had somehow positive, other economies they missed expectations and they lowered. They showed that the service activities also across the most now and most major economies are getting weaker. As for inflation, the Eurozone inflation somehow they missed expectation, and somehow, but somehow I can say that they didn't surprise us. Well, several times in the last week during the 2025, I mentioned about the weaker demand, which started from the China and Japan, is spreading across the world, and now we can see the effect much more of this negative effect of this weaker demand in Eurozone economy, which is expected to see much more, even more and more in the Eurozone, and also starting to see this effect in the US economy in 2026 as well. Weaker demand led the inflation lower in the Eurozone, and we saw that inflation, both core and headline inflation, is lower with the 0.2% monthly growth. Core inflation is to 2.3%, while the headline inflation is to 2%. That shows that the economies, as mentioned, it doesn't confirm that the European Central Bank did a very good job. It's mostly confirmed that the European economies need more support. And that's why now we have the more chance to see another rate hike, rate cut, possibly in February meeting. We have the ECB meeting on February 5. We will see what's going to happen. Now it's increased the chance. It's not, we cannot say now it's high chance. We have a high chance for that, but at least we have higher chance, even if we don't have the high chance. On the other hand, in China, we had inflation numbers on Friday that's confirmed that the Chinese economy, especially in December, is getting more demand after almost a year weakness that we had. Now, domestic demand increasing in December, and since we will have the New Year holidays in February, most probably the retail sales and demand in January and February, also especially in February with the service sector, can increase, and that can support the overall inflation and the GDP demand, GDP growth in China. However, international demand now can be the question for the next 2 months, while we have some hopes of domestic demand. Inflation for December increased by 0.2%. Headline inflation in the monthly scale annually increased by 0.8%. Positive numbers for the China, while the PPI also fell only 1.9%, while in the several months, in the previous months, it was around 3%, then 2.5% is to 2.3 and 2.2%. Now we can see that in 1.9% drop in December. Generally, the inflation trend is positive in China, and that can show us that okay, now that probably we can be a little bit more positive about the Chinese economy. While the other data, they are not so much brilliant. We will see about that. While the thing is that while we can put some hopes on the Chinese domestic demand, international demands now can be again a question. In the United States, labor market data published on Friday with the housing markets, it was somehow the mixed numbers that we had. Housing market, it was just like building permits and the housing starts. We had both for September and October. The numbers with the delay also because of the US government shutdown. We had a little bit, the numbers a little bit delay. However, let's mostly the market focus on the labor market data with the mixed numbers that we had. 0.3% average earnings growth. It was fine number with the 0.3% monthly and 3.8% annually, while the unemployment rate also fell to 4.4%. That shows that generally the labor market is fine. On the other hand, we had less newly created job with only 50,000 newly created job, while the market was expecting 66,000, and also the private jobs creation also fell to 37,000, while the market was expecting around 64,000 newly created job in the private sector as well. However, on the government sector, we had more than 30,000 newly created job. That could be another positive signal there. That's why I say that overall, the labor market data in the United States, it was mixed data, which shows that while the U.S. labor market is not strong, but it's not weak as well, generally we can say that some acceptable levels for the U.S. economy, we shouldn't be too much worried on that. However, the momentum is slowing down. In Canada, also, we had labor market data with unemployment increased to 6.8%, while we had only 8,200 newly created job in December, much better than expected, but much less than previous months, which made the unemployment to raise higher. For the week ahead, the market, generally the week ahead will not be such a busy week. Market will focus mostly on the U.S. Inflation numbers. However, we will have GDP numbers and some other important data from United Kingdom, and also the GDP and export and import data, generally trade data from China. Monday will be a very light day, while on a Tuesday, market will focus on the U.S. inflation numbers, where both CPI and core CPI expected to increase by 0.3% monthly, which means that headline inflation will stay unchanged at 2.7%, and core inflation is expected to increase to 2.7%, both at 2.7%. If we see these numbers that says that inflation in the United States is still sticky, much higher than 2% Federal Reserve target levels. However, seeing these numbers is showing at the same time that it is in the control of the Federal Reserve, and it's in line with how the Fed is thinking is going on. However, still higher, and it will, if we see the numbers at the same levels or even slightly higher, we can say that pressure on this central bank can increase for Federal Reserve to hold the current rates for a little bit longer. Now we expect 25 basis point rate cut in the first half of the year before new Fed governors will be announced. For now, we will have we are counting on 0.25% rate cut for the first half of the year, which probably can happen in March. in March, and we will see. We will see what's going to happen. That's what's overall the general market expectations. We're going to have the new and existing home sales as well in the week ahead. After almost 20, more than 20% increase in home sales in October, probably in November we'll have less sales, but still, I mean, with such a great number that we had in October, weaker or slightly slower piece of the new home sales can be acceptable for October. But generally, the data that we're expecting to see, that just like the headline inflation and core inflation, at the same time with the producer price index, which is going to be published on Thursday, and we are expecting to see the PPI at around again 0.3, 0.4%. We can say that generally the numbers are going to be published somehow in acceptable levels. With the retail sales around 0.4% also. About this retail sales, I have to mention that, as mentioned at the beginning, that the weaker retail sales is spreading across the continents, different continents. Now it's getting, we can see this effect in the US economy as well. Civic consumer confidence was weakening in the previous months, and we saw that when you have the less confidence, that people are spending less money, and like now we can see this effect in the U.S. economy where the consumers are spending less money. But I'm talking about that because even thought with 0.4% retail sales growth, which is again better than the previous month, but generally 0.4% growing the retail sales, even thought it's just like monthly number will be a really, really, really weak number to see for the U.S. economy. That's why for the retail sales, I'm not that much positive, but on other sectors, we're gonna have a little bit better numbers. Generally, the numbers that we're gonna have during the week ahead from the U.S. economy, I do expect to see acceptable numbers that generally we can say, okay, the U.S. economy in a way that we can say it's going to the soft landing going to happen in the U.S. economy. We are not going to see any crisis or even stagflation. Generally, the numbers that we're going to see, they will confirm that slowdown in the economy and a soft landing, nothing more for the data that we're expecting to see in the week ahead. Looking at that's most important numbers that we're going to have in the U.S. economy. In China, as mentioned, we're going to have the trade numbers after great, not I can't say the great, but after the good numbers that we had in export numbers in November with 5.9% growth, most probably in December we're gonna have a weaker number. That's usually the trend because international export and the trends for the new year. Usually the people they put their orders for November to get them back to get the products before New Year in December in Europe and the United States. That's why November export in China usually is better than in December. That's the trend. However, on the other hand, we saw that the domestic demand is getting fine. That's why somehow the weaker outside or the international demand is now is getting on the other side. We can see a little slightly better domestic demand. So that's why we can say, okay, now the GDP can again be somehow the balance, especially if you know that the Chinese New Year holidays will be in February, and that can increase the demand and generate the sales for this period, which is going to be the positive numbers for the next months. In United Kingdom, the Thursday will be a very important day with the trade data, industrial and manufacturing activities as well. We're expecting to see the GDP at flat, the flat GDP in November, while 3 months growth supposed to fall by 0.2%. That generally shows that the UK economy is still under pressure, especially knowing that the industrial production is expected to increase only 0.1%, while the manufacturing sector is increasing by 0.5%. That's the expectations. Again, these numbers will confirm that the UK economy is still under pressure, and with this pressure that we can see in economic growth across the United Kingdom, again we can say, okay, now it's the time to see a little bit more pressure in the UK economy, and that can increase another 25 basis point rate cut for next month. Meeting that we're gonna have in February 5, we're gonna have the UK Central Bank meeting. While this what's happening there, checking the chart, we can see that still the market risk, especially with the mentioned changes that we are having in Middle East and overall across the world. Even thought that the market risk slightly eased last week, or it was flat around 16. With ongoing tensions in the Middle East, we can expect to see again the risk above 16 for the week ahead as well. That increases the chance for the US dollar index, especially with the inflation numbers that we're expecting to see. That increases the chance for the dollar index to be able to hold the gains that it had in the past 2 weeks. And most probably we can see again the US dollar index between 98 and 99, generally around this area. Not stronger, not weaker, but between 98 and 99 can be the level that we're expecting to see the dollar index for the week ahead. At the same time, I would thought that the dollar index should supposed to stay strong in the week ahead, but still, with the geopolitical tensions higher, still again we're expecting to see the gold in demand. Still, we have some worries and concerns on the gold market as well. Why? Because during this week we're gonna have the fourth quarter earnings report as well, starting with the banking sector. That can increase the chance for the better stock market. Even, I mean, that's going to be a very risky week. If we have the inflation higher, we can expect the pressure on the stock markets. That can increase the demand for the gold. On the other hand, if the inflation numbers are softer, and the earnings are fine. Earnings generally we're expected to see the fun. I mean, the chance of having the positive earnings, especially from the banking sector, which is starting at from Thursday or Wednesday or Thursday this week. Generally with the positive numbers that we are expecting to see for the earnings, we can probably see that the positive reaction there. But in a positive reaction in the stock market, it can be negative for the gold price. However, if the inflation, on the other hand, we see that okay, the inflation is high, the higher inflation will put the pressure on the stock markets. Even thought we're gonna have this again stronger dollar index, we can have the more demand for gold as well. Generally, for that's the two scenarios that we have for the gold. All is depend on inflation numbers. As for the earnings, we are positive, and the positive earnings are negative for the gold. Looking at the energy market generally now these days we know already that the demand is less than supply in the market. We have more supply than the demand in the market, but geopolitical tensions is the main market driver in the past weeks. Technically, under $60, the energy market, well, WTI under $60 again will be under pressure, and the overall trend is still negative. And we're expecting to see it again. The oil price under $60, even thought around $55. But if the geopolitical tensions in the Middle East, especially in Iran, increase with the US, probably that there's a chance. I'm not telling that it's gonna happen 100%, but there is a high chance for military intervention in Iran by US, by the United States, and even maybe with Israel. That can increase the chance of the higher risk in the market, and if that happens, we can say okay, the oil price can increase. Otherwise, the oil price will be around $60 and lower. That's about the oil. And about the stock market, as mentioned, about the stock market, especially this week, the Dow Jones will be more interested, especially with the earnings that we're going to have from the banking sector. That can increase the chance for the Dow Jones to be more at the focus. The next weeks we will see Nasdaq more interested, but now for with the banking sector, the Dow Jones will be more interested for the financial market activities, activists, yeah, but whatever we say, the people who are active in the financial market. Sometimes I can forget the words in a second, get out of here. And yeah, for the traders and investors, the Dow Jones will be more interested in a week ahead with the banking sector earnings that we're gonna have. Generally, we're if the inflation, again, the two scenarios that I mentioned for the gold, it's a vice versa scenarios. We can expect in the Dow Jones. If we see the higher inflation numbers, we can expect the stock market to be under pressure. Otherwise, since we are positive about the earnings report, we can say overall trend is a slight movement with the slight uptrend is still can continue in the market. On the other hand, for the cryptocurrency market, with the outflows that we had in the ETFs for the cryptocurrencies in the previous week, in the first trading week of 2026, generally, again, we are not positive about the cryptocurrencies market, and we can expect this pressure to continue there. However, that's the overall condition. And generally, what we can see here, even if we are not too much negative about the cryptocurrency market, but still, there are not such a positive point that we can say, okay, that's the point. And with this positive point that we're expecting to see, we can expect the higher numbers for the cryptocurrencies. That's why we can say, okay, still the cryptocurrency market can again be slightly under pressure, unless if we see the prices above $95,000. Otherwise, the cryptocurrency market can continue its pressure in the week ahead as well, around $90,000, slightly higher, lower. That's what happened previous week and what we are expecting for the week ahead. Hope it was useful for you. Talk to you again soon. Have a good time. Bye-bye.